Hi, I'm Paul Ballou, the Chief Data and Analytics Officer with D&B, and I'm delighted that you've chosen to spend a little bit of time with us again this month, as we do every month, to talk about what's happening in the U.S. economy and leveraging the proprietary assets that we at D&B have to give you that unique perspective. Along those lines, let me give you a little bit of optimism on the front end of this month's update. As we look at what's happening in the U.S., there are still some positive developments: the resiliency of the expansion, the fact that we're generating payroll jobs that are a bit higher than what we would expect, and certainly the ongoing health of the private sector from a financial and economic perspective. In fact, when you look at D&B's estimates across those dimensions, there's some good news. For instance, we're anticipating we'll generate over 200,000 payroll jobs again this month. That's a great story for us as we continue to chip away at this very severe downturn and the negative consequences that it had on households. We would like to see payroll jobs accelerate a bit further, but 200,000 plus jobs given 2% growth tells us that labor market conditions are starting to provide some support for stronger economic growth. Importantly, there are sectors of the U.S. economy, as we've highlighted in the last few months, that are really starting to surge. And those sectors, including categories like business services, should propel us to stronger economic growth in 2015. On top of that, the balance sheet, the ongoing well-being of the private sector, remains at record levels. That broadest measure that D&B has in the private sector health, our economic health tracker, tells us that the private sector continues to be in great shape from a financial standpoint and the ability to make investments. And in fact, we're counting that investment spending picks up in 2015 as we look for those gains in terms of economic growth. Now, on the flip side, there are still some areas to inject some caution around. And in fact, as we look at our leading index, the Small Business Health Index, it continues to go sideways. What that is telling us is that that index is confirming that the U.S. economy is probably going to stay in this 2 to 3% growth range in 2015 and probably a little bit beyond that. Why is that the case? Well, there's just headwinds. Those headwinds are structural. Housing, for instance, still recovering. Those headwinds are outside of the U.S., global factors that have deteriorated during the year. In fact, when we look at sectors that are most export dependent, those are the sectors that are lagging the most. So for us, as we put the equation together and try to make sense of all this, we'll take the good, and we'd like to see more good. We're not surprised by what's happening in terms of the leading indices, because despite the good, there are these headwinds. As you put that all together, probably a little bit more of the same in 2015. The U.S. recovery and now expansion has a lot of resiliency to it, so we think it has some staying power. We think it'll accelerate a bit, but we'll probably see growth just below 3%, which is what we've been advising over the last few months. Now, beyond that, as you try to gauge planning 2015, 2016, and out to the end of the decade, it's important that you factor in the pluses and the minuses. And what I want to invite you to do is join us on November 14th. We're going to have our twice-a-year economic update, where we cover the global outlook. There's a couple things that are very special with this particular outlook. One, we're going to go deep on the major economies of the world: the U.S., the Eurozone, and China. We're going to spend time looking at both the short-term as well as the long-term structural factors in those markets to help you prepare for, yes, next year, but beyond. As part of that, we are going to take a look to the tail end of the decade as part of our forecasting process and the things to focus on, both in terms of good guys and potential bad guys. So I'm hoping you can join us on November 14th, because we think it'll be a very informative session, and our commitment is to help you with your business planning activities. So thank you for your time. Thank you for your relationship with us. And please let us know if we can help you in any other way. Thank you very much. Have a wonderful day.